please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Celebrating 16 years of Young Turks.
Hello and welcome to this very special edition of Young Turks, where we're talking about the opportunities for investment in the Indian startup space with three investors who see India as a bright spot in a world of grey. On the face of it, in 2017, it appeared to be a good year for funding compared to the last 3 years. As of December 2017, Indian startups raised a total of a little over $10 billion versus about $4.5 billion in 2016. But it was the consumer internet unicorns that cornered a lion's share of the inflows, and it was Japanese conglomerate Softbank, held by Masayoshi Son, who played kingmaker. Now, according to a Grant Thornton report, private equity investments also hit an all-time high of $21 billion in 2017. So what does the picture look like going forward? Join me now on the show today, Nandan Nilikani and Sanjeev Agarwal, the founding partners of the $100 million growth stage fund, Fundamentum Partnership, and Michael Sabia, the president and CEO of one of Canada's largest pension funds, CDPQ, which has invested $20 million in Fundamentum. CDPQ globally manages about $250 billion in assets under management, and this is their first investment in a VC fund in India. Gentlemen, appreciate you joining us here on CNBC TV18, and congratulations on getting this deal done. Mr. Sabia, if I could start by asking you, why did you decide on Fundamentum as your first investment in the VC space in India?
Well, this is part of a larger commitment that we're making to invest in India, one of the most attractive countries in the world, we think, to invest in today. And I say that because India presents almost a unique combination of tremendous entrepreneurial skills and great technological skills, as you see in the digitization that's going on in the Indian economy today. So the partnership that we're establishing today with Fundamentum is a lot about giving us access to that combination of entrepreneurship and technology, where we think that there are very big opportunities for India and very big opportunities for ourselves. The other thing I think I'd say, one of the things that really struck us about the approach that Fundamentum has, the fund is in the business of building businesses to last.
Right.
And that's a very central part of how we think about investing as we go around the world investing. It's about building things, it's about building durable enterprises, and that's at the core of the objectives of Fundamentum.
You spoke specifically about your interest in technology and wanting to bet and back Indian entrepreneurs. Specifically within the technology space, if we look at the Indian startup ecosystem, what looks attractive to you? What looks exciting to you today?
I think an area that interests us a great deal, and that again I think Fundamentum is very much focused on, is the development of technologies, particularly internet-based online technologies, that can benefit India itself, that can benefit the emerging middle class of Indians, as Sanjeev often says, can benefit the next India. That there are huge opportunities there in the areas of, for instance, online applications, in retail, online applications, travel, other things. All of those areas are of considerable interest to us.
Okay, Nandan, let me come to you now. Congratulations, on getting this deal done. We still haven't seen Fundamentum make its first investment yet. When can we expect that? You've obviously gone through the process of identifying potential companies that you could partner with, you could invest in. What looks good at this point?
Well, we have yet to make our first announcement, that is correct, and we hope to do that soon. We have gone through maybe over 100 companies in the last few months. We have a very exacting process of selection. We diagnose the companies. We spend a lot of time with the founders. We look for people who have the market, the momentum, the maturity to deal with what we need. So it's a process, but I'm confident now we have, in the next few months, you will see a couple of investments from us. And what is exciting to us is that once we make the investment, we hope to bring our collective expertise on technology, on HR, on leadership development, on marketing, on strategy, on distribution, on sales, on quality, all these old-fashioned things that are required to build a business. And we're going to bring that expertise to our selected companies to help them scale up rapidly.
Okay, the last, when we spoke, when you did set up Fundamentum, Nandan, you had spoken about how you're looking at the possibility of investing on an average about $15 million in the startup that you would like to back. Is that the average ticket size that you're still working with?
Well, it could be anywhere from, 8 to 15 kind of thing. We are looking at maybe maximum 2 or 3 companies in a year, because it's not about quantity, it's about quality. And it's about selecting these 10, 15 companies in the fund and then working with them and helping them to scale up. And we also expect that as they scale up, we expect that if they have more capital requirements, then we would perhaps go back to CDPQ, because we're seeing this as a whole life cycle approach to these companies. So what we have announced today with Michael and CDPQ is really the first step of what we think is a longer term relationship.
I think this point, if I could just jump in on this, I think this point that Nandan's just made is really important, because you mentioned before a $20 million contribution on our part, which is true, but that's really just the beginning of a much broader relationship. One of the things that we're looking for here and that interests us is that as these companies grow, they will require additional capital, and therefore it's not just the Fundamentum platform itself, which is the starting point, but as companies, if I can put it this way, graduate in size as they grow, then that will create opportunities for us to continue to accompany them as a financial partner as we invest more and more in the growth of those businesses.
So as you pointed out, Mr. Sabia, that this is only the beginning of this relationship that you have with Fundamentum, and if required, you could look at investing significantly more than the 20 million that you've committed to today. But would that also mean that you could look at other VCs in India, or would this be restricted to your relationship with Fundamentum?
Well, first point I'll make is as an element of our investment philosophy, we tend not to invest in a lot of funds. We manage 90% of our assets ourselves with our own investment teams. So when we select a fund to work with, it's on a very, very surgical process in our minds. We've decided to work with Fundamentum for a couple of reasons. Both, number one, the quality and the great capabilities of the 2 people I'm sitting beside, which speaks for themselves. I think those qualities speak for themselves in India. And the second point is just an extremely good, extremely strong meeting of minds on what is this really about. Because this is not about just funding startups, because in fact that's not the goal. The goal is to take businesses that are operating and that we all think have the potential to become substantial, large businesses in their own right, and to fund the growth and development of those businesses, and to provide them with the kind of operating and business skills that you need to turn a small business into a great big business. So it's that similarity of mindset and similarity of objective that has led us to want to do this. As to whether or not we would engage with other funds, I don't think Fundamentum is really a venture capital fund in my mind, but I think we would probably be quite hesitant to do so, given that we don't tend to invest in funds a lot. So this relationship we're establishing with Nandan and with Sanjeev is really a unique relationship.
Okay, Sanjeev, I want to pick up on the point that Nandan made, that you've looked at over 100 companies or so since you decided to set up Fundamentum. You haven't made your first investment just yet, and you hope to be able to do that over the next few months. What, if I may ask, has held you back? I mean, obviously you've seen a lot of companies with potential, but you and I have spoken of an issue that has concerned you, and that is the ability of Indian startups to scale up as well as to replicate their business model. Has that been a constraint on your decision to invest so far?
I think, Shireen, a couple of responses there. One, since we want to build a very concentrated portfolio, we want to make sure that we do the right curation around entrepreneurs who want to build large businesses in large markets. So unlike the early stage funding business, which tends to be about optionality and making several optional bets, we are in this with the company for long haul, and therefore the assessment process is a lot more detailed than a startup, because we are committing our capital and time. Two, I think I have certainly seen personally cleansing of the ecosystem from what it was 2-3 years back to now. Now I think the focus on customer unit economics, building a culture and do it for long haul versus building companies for valuation and exits. I think that transition is certainly underway, and the entrepreneurs who are coming into the fray are a lot more committed. So I don't think we are opportunity constrained. It's just that we want to be very selective in whom we work with, both in terms of chemistry and people who want our help in building an institution.
Nathan, if I may ask you, any area in specific of the companies and the entrepreneurs that you've examined, evaluated so far, any specific areas that you believe are the ones that you would like to back, that look most promising, most exciting to you at this point in time?
Well, let me first say where it is that we are not going to invest. We are not going to invest in large horizontal markets where it's all about people outplaying on capital. That's not where we want to invest. We don't want to invest in places where the unit economics is not working out, where you're buying clients. And we are not going to invest in areas where customer acquisition is very expensive. So we're looking for more vertical markets, India-focused, which have organic customer acquisition by virality as opposed to by spending money, and for companies that have either reached unit economics or about to reach unit economics. And we are looking at areas today in travel, in vertical retail, and a couple of other sectors like that.
You're watching the CNBC TV18 exclusive. We're in conversation with Nandan Nilekani and Sanjeev Agarwal, founding partners at Fundamentum Partnership, and Michael Sabia, the president and CEO of CDPQ. CDPQ investing $20 million in Fundamentum. Michael Sabia, let me ask you, outside of the investment that you've done in Fundamentum, about the India story. You know, you're excited about the opportunity in the renewables space. You're looking at the stressed assets opportunity in India as well. Can you give me a sense of what is the current level of investment in India and where we could see that headed?
Sure. Up to today, we've invested about $4.5 billion US in India. That's, in our minds, that's a relatively small amount for an economy of the size and the growth potential of India. So that's, we're clearly working on increasing that number step by step. What we're announcing today is one small step in that direction, and hopefully it'll become an even bigger step going forward. In terms of areas that are of interest to us, as you mentioned, we've done a lot and will continue to do more in financial services. We're very interested in logistics, where we think there are big opportunities in India, given both the emergence of e-commerce and, second, all the important changes that will flow from the GST. We're very interested. We've done some, and we'd like to do more, much more investing in renewables, renewable energy. India's energy requirements are obvious to everyone. and the fact that they will have to be increasingly climate conscious seems to us to be a strong and underlying trend that we would like to be part of. In addition to that, we're also very interested in the consumer product space. That's an area where we think there could be some very interesting opportunities coming forward. Similarly, in healthcare, that's another area of considerable interest to us. So what we're trying to do is to do more of some of the things that we've already done with some of the really good partners that we have the pleasure of working with here, to go deeper in those relationships, and also to spread out a little bit with respect to, say, consumer and healthcare, to broaden the base of the investment activities that we have. But we would like to see over the coming years a significant step up in the overall level of investment here.
So what could it be? In the next 5 years, $4.5 billion could be what, Michael Sabia?
Well, $4.5 billion will be determined by the quality of the opportunities and the quality of the partners who we find here and can continue to work with here. But I think you know, that's the $4.5 billion is a relatively small percentage of our total asset base. So I think you could expect to see some pretty substantial increases in that number over the next 5 to 7 years. But I'm not going to give you a target, because we're pretty disciplined about it's about the quality of the partner, and it's about the quality of the transaction, sure. And the capital follows both of those two things.
Now, if I could ask you about some specific investments that you've already done. For instance, you've got about a little over a 1% stake in Kotak Mahindra Bank, and there is a requirement, a regulatory requirement there for Uday Kotak to bring down his stake by December 2018. Would that be an opportunity where you would look at upping your stake in Kotak Mahindra Bank, or, for instance, in the asset reconstruction business of Edelweiss, where, again, you've picked up a stake? So would those be areas where you would look to significantly up your presence and stakes?
The short answer to your question is yes to both of those. In the case of the Kotak Bank, our thinking is not driven by whether or not, or what the regulatory issues are that Uday Kotak is working on as we speak. Our interest in that is we think that is a great bank, and it has a great future. And similarly, Edelweiss, you know, we have a very, very good partnership with Rajesh Shah. We think that business, Edelweiss, is very interestingly positioned across, you know, a set of very specific financial services that are very important as India works through this important asset reconstruction challenge that it is facing. So would we be open and interested in increasing our presence in both of those businesses? Absolutely.
On the renewable side, I think it was, what, in 2016 that you had spoken of a commitment of $150 million. How much have you invested already in the renewable space so far, and where do you see that headed? Well,
yeah, our principal investment in renewables is in a company, and interestingly, Sanjeev is also an investor, and we're partners in that business as well. A solar power company that I'm sure you know of called Azure. That's our principal area of investment in renewables. But the renewable space is, so that is a pillar of what we're doing, and it's a pillar of what we will continue to do. That's a very important part of the portfolio for us here. That being said, the renewable space in India is so large with respect to both solar and wind in particular, and we would like to significantly increase, very significantly increase our exposure to both of those alternative sources of energy over the next 3 to 5 years. There's a very significant growth opportunity there, and as you know, the cost functions of those technologies have changed so much. Yes. That they've become so competitive against traditional power generation that, as I say, it just opens up big opportunities. We're, I think in North America, I think we're the biggest investor in renewable energy among pension funds. So it's an area that we know a lot about, that we're very confident in the expertise of our people, and therefore, we want to apply that expertise here and to build pretty substantial businesses in the renewable space in India.
Speaking of growth opportunities in India, Michael, what about real estate? Because your realty arm has inked a partnership with Piramal. What's the outlook as far as the Indian real estate sector is concerned and the prospects of further investments within this sector?
Yeah, we certainly have an interest, and our real estate subsidiary has done an interesting partnership with Piramal. Ajay Piramal is a great partner of ours, and we're looking to extend and deepen that relationship with him, not just in real estate, but potentially in other areas as well. So we'll continue to look for very targeted opportunities in real estate, and probably with an emphasis on different forms of real estate financing, with probably some emphasis on the housing sector.
You talked about exploring other opportunities with Ajay Piramal outside of real estate. What could those opportunities be?
On that one, I think I'm going to have to ask you to stay tuned. When we've got things, nailed down, then we'll be more than happy to announce them.
Anything on the infrastructure side outside of the stressed assets conversation that we just had, on the infrastructure side that's looking good to you, given the fact that the government is continuing to be the key driver there when it comes to spending?
Infrastructure is an area of interest to us globally, and we're a pretty large global investor in infrastructure, both in our home market in the United States, in Europe, really, and Australia as well. So pretty much across the world. So yes, we do have an interest in infrastructure. So far, we have the focus of that has been what I mentioned with respect to renewable energy. And that, I think, is in the energy sector in general, will probably be the centerpiece of the work that we do in infrastructure in India as well. There may be some additional areas that are of interest. Toll roads, we've been an investor in toll roads in various places in the world. That may open up an opportunity for us here. That's something that we'd have to wait and see. But I think in thinking about the future of our infrastructure presence in India, it's a lot around renewables.
Okay. Nandan, if I may ask a quick question on the current court proceedings underway in the Aadhaar matter, and I won't get into specifics, but broadly, the sum and substance of what has been observed by the Supreme Court as of now is the fact that without a data security law, users' data is at risk. Do you believe that till we actually put a law in place, the government should hold back on mandatorily linking Aadhaar to services?
Well, I think the case is right now sub judice in the Supreme Court, so I think I will not comment on that. At the same time, I do believe that the government has moved quickly to set up the Justice Sri Krishna committee. They have published a draft of their thoughts. They've got plenty of feedback, and I believe they're now in the process of finalizing a law which they will give to the government. So I think that process is well underway.
That white paper has been out for some time now, Nandan, but do you believe that India should follow the EU model, for instance? Do you believe that that should be the way forward when it comes to putting a data protection law in place?
Well, I think the leadership, the team under Justice Sri Krishna it's an excellent set of people working on the law. And I believe that they have got submissions and ideas from around the world. Certainly the GDPR will be one of the things they will look at. But I think given where India is, and given the fact that data empowerment is such an important aspect of what we need, I'm confident that they will come out with an excellent law which is right for the 21st century.
Okay, Sanjeev, I'll end then by asking you about what 2018 looks like for the startup ecosystem. You spoke about the cleansing that has taken place. We're also seeing a fair degree of consolidation and perhaps some more consolidation in the offing, which looks like it's going to be largely driven by investors. What's the outlook for 2018? What do you believe could be the high points?
I think 2017-18, Shireen, is being a lot about the fundamentals and the fact that we have now global validation from very large players like Alibaba, Tencent, Naspers, Softbanks. So it suggests that the digital economy in the making is looking very good to a lot of overseas players. And I think we are getting into the next phase of entrepreneurship, where the spray and pray phase is behind us. And now serious company building is happening. I think we've got a very good seed and startup ecosystem. And then we've got a very good late-stage ecosystem with the Tencents and Alibabas of the world. And then Fundamentum and CDPQ, we are trying to play our part in filling up the ecosystem where there is a missing middle, if I were to use that phrase.
Okay. Michael Sabia, the final say to you. I think when you visited India in 2016, you said that India was the bright spot in a fairly cloudy global environment. What we've seen happen in the past year or so is that global growth has picked up and momentum, at least when it comes to global growth, seems to be back at this point in time. So where does India stand in the pecking order in terms of your allocation?
Nothing's changed. Same place. India is a bright spot, and you're right. World growth is better synchronized than it was a year or two ago, and that's probably that's a good thing. But notwithstanding that, I mean, we're a very long-term investor. What we're looking for are what are the big underlying structural trends that are going to drive growth in a variety of different countries around the world. And when we look at India, we just see so many factors here that cause us to conclude that this is going to be a very, very interesting place to do business, where there are some great growth prospects, where there are great partners who we can work with. There's a lot of opportunity in this country.
Well, Michael Sabia, Nandan Nilekani and Sanjeev Agarwal, congratulations once again on getting this deal done. We wish you the very best of luck, and thank you very much for joining us here on CNBC TV18 with your thoughts on the way forward. Appreciate your time. With that, it is time for us to wrap up this CNBC TV18 exclusive from all of us here. Goodbye. Many thanks for watching.